Good morning, everyone. Had a few more come in since I was sitting here. Might just do one more sound check. Make sure you new guys have sound. If you already responded, don't worry about doing it again. You're going to mess me up all day, Gerardo. I sent you that other link, and now you show up in my list as Joel instead of Gerardo. So if I call you by my name, my apologies. Those URLs are each linked to our names, so had to download an update to Camtasia. It was trying to force an update this morning and ended up taking forever finishing up the download. So trying to replicate me, Gerardo. That can be good or bad, I guess, depending on what parts. Sounds like you're having some success with the tape, which is good. So glad to hear that. Well, we on this final day are going to spend most of the time on your needs. This was something that we covered a lot of the information, and I provided a couple videos to those that attended to help speed up things and expedite things. So we covered the bulk of things that I wanted to discuss today. That allows us to take this last session and use that for you guys for question and answer. And so we're going to just invite you guys right up front. As you have any questions or anything that you want to put in there, just put your questions in, and I will answer them. I will work it in a somewhat orderly way as we go, but you can put your questions in there at any point, and then we'll just address that as we go. As far as our schedule for this morning, the things that we're going to be talking about and going through, we'll just take a quick overview because there are a few questions. I had a couple individuals that couldn't make it because of the change when I had no electricity yesterday, so we're going to address their questions in here so that they can still get that in. But here's a couple things that I wanted to start with. One of those was actually involving a question about the daily action plan, and I was asked by a couple of people if I would mind going back through that, what I look at. So we're going to take a look at that just here, as the market has opened, the type of things that I would normally be looking at just a few minutes pre-market. Another thing that we're going to talk about, I made a comment about divergence, was asked for an explanation on that, so we're going to go through that again real quickly. Received a couple questions on scaling and how I was getting in and out of positions. Also going to cover something I've talked individually with a couple of you who have already implemented those steps, taken accounts over where you can have a little more scalability on the accounts by going to the spot forex market. They were wondering about that. How can they get that data for free, or can they get that data for free? There is a way that an individual can get that on an ongoing basis. I would say effectively on a permanent basis, that they can get that tape and the time and the time and sales, the dome, the things that they want to take from the futures market, and have that data free for the spot forex. And then another individual was wondering how I got involved in reading the tape, where I learned how to do it. So we'll go through a couple of those things real quickly. And like I mentioned, you guys are welcome to put your comments out there as well, any questions that you have. But I'm going to start with this first thought of the basic steps that I would take on any given day when I sat down was getting ready to trade, what I would call building an action plan for the day. And so let me get a chart in here, and I'm going to just put the chart up. This was just a daily chart of the S&P, and it's not, I don't have the data loaded correctly because I just loaded the chart, but it's good enough for just the purposes that we're going to look at. Normally, in my mind, I have a pretty good idea where we're at on a daily chart. I don't necessarily have to look at it each day. Normally, though, I could say in my mind, I know whether we're in an uptrend, downtrend, whether we're up near resistance, whether we just broke prior highs, something of that sort. And you guys probably all have that ability to a degree. You watch the market day after day, and you do get kind of a feel for where we are. But it can be beneficial to begin just by looking at a broader overview, see if we're coming up into resistance, Are we coming down into support? And just note a few levels on the chart. When I look at the chart as it sits, we had a rollover at the top here that looked like it was going to start to downtrend, and now we've rallied back up to that and actually broken a little bit higher. The way it goes, with trading, but I look at it from a daily standpoint and just say, okay, we've broken above these highs. I personally would start to anticipate some sellers coming back onto that. We'll run through that a little bit, make a new high by a few points, and then we see some sellers come back in and kick it back down. But that's where I would usually start. And if there was significant levels that would be in play off of that daily chart, I would want to note those. Now, when I look at this daily chart, and this would just be part of my thinking for today's purposes, and let me get a crosshair on here. These levels down here, obviously for a day trader, they're not going to come into play today. Very unlikely that we're going to drop 60 handles and get down to that. I'm most interested in this level right up in here. If we got to pull back into the 2475 area somewhere, give or take right up into those highs, that could be a buyable thing. There's likely to be a bounce there, or I could take shorts off the top of that. But I'm not going to bother marking up levels like the 1173. We're not going to get down there today. Very unlikely. Same thing goes for the 1200. It's not likely we're going to sell off 30 points and then I'm going to take a trade on that. So I just look at that, get a brief overview. Next thing I would do, and let me find a chart here. This would be just my 350 tick, which I would normally trade off of. This is the one that I will put more importance on, and that would be coming in, looking at the levels that were active overnight, levels that were holding us yesterday, and so forth. Sometimes that does require stretching this out a bit. If I can't see a full day's trading, I may need to come in and go to 1,000 tick, try to get enough price action visible there. But this is where I would start looking for some levels. Now, with Karen's indicator, I can type those levels on, put an alert there, and that's what I would normally do. I just want alerts up into the high. I want alerts coming down into these areas that might act as support. Put the alerts on there, and then I don't have to pay that much attention. But I know in my personal trading, I'm going to primarily be looking at two setups. If I'm looking at primarily two setups, I want those alerts to be keyed in specifically for my setups, and then I'm just going to sit on my hands until it hits there. And I think that's the most important aspect of that daily plan, is I don't want to have the plan just a vague, open-ended chase momentum when I see it. I'm going to use just some horizontal lines here, and I would always look at the highs, and I would always look at our low. And then if we've got some areas, like we've got some sideways action from yesterday's session, we could kind of take that action and say, hey, if it gets down into here, this area somewhere between 27, 25 may act as support. I would just mark out 2 or 3 levels. Now, the reason that I'm doing that when I'm taking my own personal trading, 2 essential setups that I'm doing, one of them is going to be fading when we're out at the extremes, which would be near the highs, especially if we can get a new 3-4 tick new high, and it's going to be fading when we're down in the lows. At those areas, if I'm fading out there at the edges or at the extremes of yesterday's range, I have things that I prefer to see, and in that sense my action plan is the same every day. I prefer to see a push through the high, get enough through the high that we can clean out some stops if there's stops there, and then I want to see that come back into the range, see some sellers hit it, and then I want to come push again. My preference, push again up into that area and see if the same sellers are still there. In doing that, those are where I get the biggest moves, the trades that will run 10, 12 points. That's going to be out there at those extremes. So I'm going to mark those areas, and then I'm looking for specific criteria when we come into it. The other setups that I would normally trade would be as price, as the instrument trades throughout the day, we get price patterns there. Maybe we get little double tops, or we get a downtrend channel or an uptrend channel. that would be looking for specific things that occur that I can't identify pre-market. So some of my plan I can identify pre-market, some of it I have to go through and take it on the fly as it goes. We start seeing a series of lower highs. We come up into that, and I may want to short it if I see sellers on the tape. But those are the steps that I would go through, would be to identify these levels that interest me, put a price alert on it, and then my plan personally is just I'm going to sit on my hands until I see it hit those levels. If I see something start to develop and I can identify a trend channel, then very quickly I will act on that when we come back into the appropriate levels. But other than that, I'm just going to be sitting there. I'm not scanning through 40 instruments trying to find something moving. If I don't have it moving, we got a slow day, we got a slow news week. That's trading. Sometimes it's lousy, sometimes it's good. But I don't start scanning into instruments where I'm not comfortable with the instrument. I don't know how it trades. I don't know what the speed of the tape normally is. I will set this up and then I'll just watch that. And then in the first hour, if nothing develops, I'm not interested. I'll wander off and quit and do something else. Final thing that I would normally do, just looking for the news, make sure that I'm not going to be trading into a news release. And so I'll check that each morning. I usually use Forex Factory is a good news source. Econoday is a good news source that shows you stuff pertinent to the futures. If you're going to be trading the 6E or the spot Forex, that Forex Factory news is going to be better for you because it's going to show stuff from other countries that will affect you. If you're just trading the S&P, the things that will primarily affect you for scheduled releases are going to be there on Econoday, real clean to see the whole week at a glance. That's basically all I would do for setup. My plan doesn't change a whole lot. I don't usually come in and trade like a scalper one day and trade like a swing trader the next day. Normally when I trade the same pretty much all the time, and unless I'm working with a client and trying to demonstrate something different, I will usually be trading that same methodology day after day after day. So I don't jump back and forth trying to do a lot of different things. If anybody has any questions about that, beyond that, put it out there. The one who asked that question wasn't able to be here, so I mentioned that I would just go through that here on the fly this morning. Like I mentioned, if you guys have questions just about anything, just put them out there, and I'll work those in as we go. If I don't have questions, I'm going to take this down. Let's see, Gerardo, your question, how to configure a chart with a continuous contract. Are you using NinjaTrader? Are you using version 7 now? Okay. Doing a continuous contract, you're going to have to go into your control center and you're going to open up your instrument manager. This is going to be in your tools menu. And you're going to take an instrument, and let's just do one for the YM. So I'm going to scroll down, find the YM here, and highlight that. When I want to do this as a continuous contract, there's a couple things that I can do to it. I can double click the YM here, this line, and this is going to open up that instrument editor. And the merge policy, I normally have mine set to do not merge. And the only reason for that, when you come right into rollover, it can cause some goofy action on a tick chart if we tell it to merge. And the reason that it does that is it will take some prints when we're coming up into near rollover. It will take some prints from the old contract, and then it will throw that into the new contract, and you'll end up with a candle that's 10, 12 points high as soon as you get your second tick in the live instrument. So I normally tell them don't merge as a policy, but you can set that as a policy to merge, or you can come in and set it on the chart itself. But that's going to be one thing that you need to have. So if you're going to do this, you're going to tell it to merge back adjusted, and that's really the only thing that you need to set on there, and we'll hit OK. And then The second step in that, when you come into this little drop down window here, which is your expiry, you're going to select the one that is pound pound hyphen pound pound. Once you've selected that, we're going to add that to the instrument list with the arrow over here, and we'll see that appear over in our default list, YM pound pound hyphen pound pound. That will then become a continuous contract. Now the continuous contract, keep in mind you can't trade that. So if you have a continuous contract up and you are trying to use your chart trader is not going to work on there because it's not a legitimate code or a symbol for your broker. This is just for charting purposes. So that's all that's required in that. When you put your YM in there in the chart, that will backload. The other thing that you can do once that's done, you hit OK. The other thing you can do on version 7 is you connect to your default feed, your Zenfire feed, which is your broker, and then come back into your file menu. And let me just pull this over here. On your control center, you go to your file menu, come back down to connect, and connect to your kinetic. And you'll see that that will connect to both of these feeds at the same time, but you want your primary feed to be in here first, and then connect to kinetic. And kinetic will help with backfilling your historical data. So that is kind of beneficial when you're doing those continuous contracts. It's day data, doesn't give you tick by tick, but your Zenfire will give you your tick by tick intraday data. The kinetic can give you a feed looking backwards for a considerably longer period of time. When that's done, let me find a chart here again. We'll switch this over to that instrument that we just made. Switch this over to day first. Tell this that we want 5,000 days if you want to go back in time, and load that up. And this will pull in, first of all, off of your Zenfire feed, and then secondly, it will try to backfill anything else off of the kinetic feed. So usually you can go back, in most cases it'll let you go back a year and a half. If you've got a kinetic paid feed, you can go back 10, 12 years in that. But that at least allows you to see a continuous contract there. But those are the steps in setting that up. We talked about divergence. Yeah, no problem, Gerardo. We talked about divergence, and I had made a comment about divergence when we were going through that little section on the RSI fade, and I said, I think you can see the divergence on the price action. And I had a couple people ask what I meant by that, or how you could see divergence looking at the price action. So I'm going to take, let's take this chart back over here. We'll come back into the ES. And I'm going to just switch this to a time frame that I would normally trade. And I would normally have my price compacted as far as the time axis goes. That way it allows me to see the bulk of the action. I can see the swing highs and swing lows. But I'm not distracted by saying, hey, there's a doji, there's an engulfing candle. It doesn't matter really on short-term tick charts. I've got the RSI on here just to show you this, and you can see some divergence. And let me get rid of these lines. You can see the divergence here in this high when you look at your indicator and you compare that with what your price was doing at this point. But there's something that I've noticed just about every time that you have divergence. There is a pattern on your charts that matches that. And I would say if you go back and look at it, it's very safe to say it's 90% of the time you will have this type of a price pattern. Normally where you end up finding divergence is when you've got a nice move where it just makes a nice extended, let's say a one-sided move, and then we come in, have a little pullback, And when we try to make a new high, that new high only goes another point or so. We come back in, make another new high, and that new high gets us a tick, 2 ticks, 3 ticks. That is the kind of the footprint that you will see on a chart when you're talking price action. That is what you'll see virtually every single time that divergence is here on an indicator. You don't have to look at this scenario to say there's probably a little bit of divergence. You come down, uh, you run right back in, barely make a new low. And to me, I look at that and say the majority of the time, those little new lows or new highs, there will be the divergence there. So when I see a move, and this obviously running overnight, it's not moving far enough, fast enough. It's there at the close or there at the afternoon session when it reopened. But when we get a move like this where it just moves one-sided, and then all of a sudden we can barely make a new high, guaranteed divergence is going to be there just about any indicator you look at. So that's what I was referring to when I say you can see the divergence on the price. If you start watching, if you've got a pet indicator, something that you like to watch or that you've watched for a long time, and you've looked at the divergence on that in the past, just go back on your charts and look at them, because the majority of the time when you see divergence there, you're going to see a move in price where you're going real vertical, and then that starts to roll over. You're barely getting new highs, and when you see that appear, that's where the divergence is. If you minimize your indicator, just watch it on the basis of your chart, you'll be able to go back in, pick it out, and say, okay, it's there. So that's kind of what I was referring to by that. Get this stuff back off of here. The question, I had a question on scaling, and it was in part based on the trade that was recorded and put on the video. We talked about it real briefly, and apparently I didn't explain it clearly enough. But it's a setting that you want to look at inside of your dome, and that's the way that I do it. So I'm going to find a dome here. This setting, we're going to go down to properties in our dome, and on these properties, that is this second property down under the general tab, the ATM strategy selection mode. And this is how I'm able to do what I do for scaling. Normally when I'm running a multiple lot position, it's a big enough position that scaling out in 3 places doesn't suit me at all. Since I need to scale out in more than 3 places, I just essentially put one target and I've got my stop. I don't set up the ATM strategies to manage multiples for me. And then this setting, it needs to be on select active ATM strategy on order submission. What happens when we do that, and I'm going to get this small enough so that we can actually see the dome here. If I took a 10 lot trade and I just came in and took the position in the market, and now here's my entry price. Oh, let me close that. I got to put a strategy in there in the first place. Let's say that I've got this with a 10 tick stop and a 30 tick target, and I change that to a 10 lot, and I just come in, buy at the market. I have a target up here and I have a stop down here, and now my ATM strategy has changed. It says active ATM strategy 2. When that happens, I will just come in and change this to a 1 lot or a 2 lot, and I can come put these orders out here and just scatter them in. When those orders are scattered in there, if price moves up through them, that will automatically deduct off of the 10 here and here, because it's part of the active strategy. The flip side of that, if I didn't have that set correctly, it wasn't set to select the active strategy, then when I put those orders out there, they would be a standalone order, and when they got triggered, they would then place their own stop and take profit, and it wouldn't deduct that from my actual position. So that's the way that I scale that out, and that's why I can take those orders and move them around from up here. I can move it up above my T1. Um, it doesn't mess me up like it would if I was using a strategy down here where I was managing multiple targets. And I do that virtually every single time I trade, unless I'm in a very fast instrument where I'm trying to scalp out the first target 4, 5, 6 ticks. If I do that, I may set this up as a 2-target strategy where one of them goes off automatically, and then I will still manually come in and put in the rest of my orders. But that's the way that it's all done, is in your properties, making sure that this is set correctly. Select active ATM strategy. The other question that was related to that was on the hotkeys. Do any of you guys use hotkeys with Ninja? Looks like mostly no's. The hotkeys, I do use those. I would say probably about 60% of the time for order entry. And what happens with the hotkey? You can take a hotkey and set it up where you don't have to be reaching over here trying to place the order in your dome. The way that works in Ninja, you can set the hotkey in your control center, in your options. Oh, I think this changed in version 7. I've got mine set up, the hotkey manager in version 7. And the order entry, I have mine set up just a buy market is an Alt B, and a sell market is an Alt S, and a closed position is an Alt C. That will close everything and cancel all the orders. But the way the hotkeys work is it will only work on the active window. And it would work whether you had a dome open or a chart open or a time and sales open. It would work on that instrument. So let me just show you, if I come into this on the dome here, and this dome is now my active window. I've just clicked it, I've left clicked it, and that's my active window. If I hit Alt B, that just buys me at the market instantly with whatever strategy is in here. I don't have to come click, make sure I'm clicking in the right column. I know I want to buy, I know I want to sell. I just hit the Alt B, the Alt S. If I want to close it, I won't move my mouse. I'll put my mouse is not even on the dome. I'll hit Alt C. That cancels my orders that are out there. If I hit my, I want to close that position out. Whoop, it had already closed it. I hit it twice. But that's basically how you run those hotkeys. Now, what happens with that if you're on a chart? And let me get a chart again. If you're on a chart, you can still use that hotkey, but when you place your order, it's going to default to whatever order is set in your chart trader. So I can come in, the chart's the active window. If I want to come in here and sell this, I hit my Alt S. And since I had just a 1 lot in there with no strategy, it put on a 1 lot sim trade. So I didn't have to have the dome open, didn't have to reach at it. So if I'm watching the chart and I've got my time and sales here running, my chart's active, and I've got a 10 lot loaded into my chart trader, very simple just to hit the order. I don't even have to move my attention away to hit the dome. And so that's how I was placing those orders. You don't see the mouse move, nothing happens, because as long as the dome is active or the chart's active, that's where it's going to place it. The danger with those hotkeys, obvious danger, if you're not paying attention and you clicked on something else, you may take a position in the YM when you thought you were taking a position in gold or so on. So you just, because I only usually trade one instrument at a time. Um, to me, I'm always cognizant of which window's my active window, and then I use those hotkeys the majority of the time to get in and out. I just hit the Alt C, close that. Didn't have to do anything with the dome. Doesn't make any difference. I just come in and hit the position. If there's any questions on that, like I say, on version 7, you've got the hotkey manager. You used to do that in the old options window. It is very handy. I think where I got hooked on that goes back many years to the Realtek platform. And the Realtek platform, I always used the hotkeys. The hotkeys, you're trying to hit traders, and I had probably 15 different hotkeys memorized. Hotkeys for using SOS, hotkeys for hitting island, hotkeys for hitting Instanet, and that routing was very important, and I could route it a lot faster with the hotkey than I could with my mouse, trying to come in and select a participant and then trying to direct an order to them. So I've always thought it was very beneficial, very handy to have, and they're still there on Ninja. Obviously, don't have to memorize as many. I've just got 3 active on mine. The hotkeys are also there on your chart, for drawing tools and so forth. But I have an Alt B for buy, Alt S for sell, and an Alt C for close the position and cancel the orders. I'm going to stop and reset the tape, and I'll be back here just 2 minutes. Well, it looks like that update definitely got things working better with Camtasia. I went a little long on the first session there, and it grabbed it no problem very quickly. So let's see a couple other things here. Free data for Forex traders. When I was talking about the spot Forex market and using time and sales and the dome and a chart from the 6E, I've had a couple people ask about that didn't want to have to pay for that data. And I would agree. And the reason for that, when you start paying for data, you think about it as a smaller trader especially, it's pretty easy to spend 125 bucks a month or more on data and a charting platform. I know many people that are spending $250, $300 a month for data and a charting platform. And you take a guy with a $5,000 account, it does not financially make sense. It's not good account management to come out and spend $3,600 a year for data and charts. So I've been asked this before, and I've had individuals that have done this for a number of years and had free data, free charts the entire time. A couple of ways that a guy can go about doing it. One of them is to have an account open and funded. For example, with a broker, with your Ninja platform, if that's the one you want to use. The majority of brokers, even if you subsequently pull the account, you leave a buck or two in there, they will typically still provide your data feed and still provide your chart access. And so one way of going about that is simply to have an account and say, hey, I'm not going to be using that money for futures trading. I'm going to be trading spot Forex. But you can open the account, leave $1 in there. And I know a number of individuals that have had 2-3 years an account with $1 in it, and they still get their data. They still have their feed coming in. They still have the ability to use the chart platform. The other way, takes a little more work. If you look at NinjaTrader's website at their partner page for their broker partners, I don't know where it's at right now. Last time I looked at it, there was somewhere between 40 and 50 brokers listed. Each of these brokers will provide you with a 30-day demo. And that demo will have live data. That's not, they don't feed that off of a separate feed. It comes off of one feed if you're on the Zenfire feed. They don't have a sample or a sim a Zenfire feed and a live Zenfire feed. They're all fed live. So I know other individuals that would come into a broker, they get their 30-day trial, use the platform for that 30 days, and when the trial expires, they can't log on and connect anymore to the data. So a day or two before that expires, they contact broker number 2. They ask for a trial. They get their 30-day trial. The only thing that really needs to change is your account connection. You don't have to change your charts, your workspaces, or anything else. They put in the new license key that the broker gives them for the trial, put in the new password and name that they give them for the trial. Takes 2 minutes to set up an account connection. They use it for the next 30 days. They go to broker 3 and do the same thing. That is something that, again, some individuals have chosen to do because they're looking for any advantage they can get, and instead of paying 100, 125 a month for a data feed, they look at it and say, I can try these demos. I can do it for 6 months or a year, and if the account at that point is big enough to go trade the futures instead of trading the spot, then I'll go trade the futures instead of spot. So two ways of going about that, where essentially you can get that indefinitely. Any one of those ninja brokers should be able to set you up with a 30-day trial. If there's 40 of them there, that gives you 3.5 years. And in 3.5 years, I think if you come back and ask the first guy for another free trial, they're going to give you one. So I don't say that to try to rip anybody off or say, hey, be cheap. But I'll tell you what, when you're trying to make a go of it trading, if you can save $2,000 a year and put it in your account, save $2,000 a year and put it in your account. The data feed will still come in without using the $60 a month ATM strategies. You're not executing on that platform, so the ATM strategies don't matter anyways. Everything else on the demo platform is exactly the same as live. Yeah, Gerardo, I've heard some will do that. Some brokers will give you a new demo every month, and they contact the same broker month after month. I have heard a few people commenting on that had demos with brokers, and the brokers have been hurting over the last 2 years. Not as many new traders coming in opening accounts, and the brokers have gotten a lot more aggressive after that 30-day period is up. And many of them are telling the people there will be no more demo for you. You have to open an account and fund it, and then you can use the sim trade feature on that account. So if a broker will do that, some of them don't care. It doesn't cost them anything to give you the demo. Some of them will just set you up a new demo month after month after month. You just call them and ask them if they could refresh it for you. They give you a new email, new password, and you punch it in and go. I've talked with a number of traders who were trying to make a go of it with $2,000 accounts, but they were spending $3,000 a year on data fees and charting platforms. And I told them, man, you got to stop and do the math. If you took that money that you're spending, essentially it would equate, if you took that money and put it in your account instead of blowing it on data, it would equate to 150% return on your account. And these are guys that are scratching break even at the end of the year, or they're up 7 or 8%. It's, let's stop and do the math. You could have 150% return if you put that money in your account instead of spending it on data. So it is one area where I have looked at it with my own particular situation. The fees that are involved with NinjaTrader, we pay a little more for execution than you will on another platform. And I've looked at it and said this, I wouldn't be cheap to try to save a buck. I've used XTrader, I don't like it. I've used CQG, I don't like it. And I really don't like it when they charge you $700 a month to turn it on. So To me, I don't see any other viable options. I've used just about every platform out there, and I don't have any other viable options when it comes to the features that I want and that I like in my trading. And I look at the volume. I'm just about well, I'm pretty much done for the year anyways, but I'm up at about 11,000 round turns, a little over 11,000 round turns for the year. And I used to trade um, for a few years, but I was pushing 40,000 round turns, 50,000 round turns a year. And I look at that and say, I could save 25 grand, 30 grand a year by not using NinjaTrader. It has never been worth it to me because of the service I got out of it. But for many smaller traders, it does not make sense. It's not effective to do that. So you got to look at your unique circumstances. If you can save a couple $100 a month, boy, save the money. The question on how I got involved in reading tape, the the answer, I talked about it briefly, but the answer in a nutshell was it was a total accident. I've never, in all the research I've done, I have never found any source of information on reading tape. And I've had several people ask if I had a mentor or who taught me how to do it. Bottom line, I never found anybody that actually was reading tape using it the way that I used it. It was completely self-taught. That being said, it was an absolute fluke. It was an accident that got me involved in the tape. And I put a chart here, which I'm going to just throw up real quick, and I'll show you the instrument and just explain real briefly what happened, what caused me to start looking at tape. I don't know if any of you guys ever used a Realtic platform, but if you went back 10 years and beyond, Realtic was the platform of choice for most day traders. Very nice platform, had your charting, had your level 2 for your execution, you had your time and sales actually built into that. At the time that I saw this, it was actually a feature that was built into the time and sales, or excuse me, built into the level 2 that I hated. On the side of the level 2 window, there was a little time and sales, and you couldn't remove it. You couldn't get rid of it. It was just there. And it drove me crazy to have this, to have this window on the side of my level 2 that was just streaming prints by. And I never looked at it. I never understood it. It was just there, and you couldn't get it off the chart. I was trading a lot of high-flying stocks from 96, 97, 98, 99, 2000, and 2001. I was not trading any futures. But back in 2000, I was trading Palm, and this was shortly after Palm had been spun off by 3Com. And for anybody that's traded a lot of equities back in time, one of the things that you probably paid attention to as a day trader was you looked for who was the most aggressive market maker on any given stock on any given day. And if you were in doubt, you watched Goldman Sachs because they were the biggest of the market makers out there, most aggressive, most active. And whichever market maker was the most aggressive for that day or in that time period, we called them the axe. And they were the ones who either had big customer orders to fill, or they were aggressively trying to make the spread in the market. I remember at this time, you still had a fractional spread, and so the spread meant something. Even getting a teeny or a 16th, as we it was back then, it was 6.25 cents, and there were a lot of traders coming in scalping, simply trying to get a teeny out of it. Because on 1,000 shares, that made them 62.50. They paid their commissions, left them somewhere close to $50 profit. And you could scalp in and out, get that tick, in and out, get the spread. And essentially, we were acting like little mini market makers. So if you were doing that, you had to pay attention to which market maker was the most aggressive. And you did that on your level 2, where you could see the market maker ID and see what they were doing. So on the particular trade that got me watching the tape, I was watching Goldman Sachs, and Goldman Sachs was acting very strange in Palm one day, and I traded Palm very frequently since it had been out, just because it was a very expensive stock. It was up, split adjusted at $1,000 a share at one point shortly after its release. But it was a stock that was making 20-point moves in a day. It was very easy to come in and pull some money out of that. And I saw Goldman was sitting there on the bid with 100 shares, and then they were one tick above the best offer, and they had about 30,000 on the offer. And my immediate gut reaction was to step in and short it. That was what you did. When something was that lopsided, prevailing wisdom was you always leaned on that size and tried to step in front of it and shortcut it, because you knew that worst case you could get out on their big size if you had to. You had them to lean on. So I was getting ready to place the order, and on the time and sales, I saw 1,000 lot hit that 100 lot bid, and the 100 lot bid didn't move. And I didn't realize, that they had the ability. I didn't watch time and sales, but I just happened to see it. And I didn't realize that they had the ability to put the iceberg orders out there. Somebody could hit them for 1,000, even though they were only showing 100, and the 100 was still there. And so I looked at it, and it caused me to hesitate on my short, trying to figure out what happened. Another 1,000 lot hits them. Somebody, sold it at the market to them, and the 100 lot was still there, and it kept happening. And I actually quit trading, and I sat there and watched it for the rest of the day. And anytime price started to move up, they would lift that offer up a tick or two, or it would disappear, and price would go sideways for a little bit, and then Goldman would come back on with a huge offer and 100 on the bid. And then they would absorb everything that was sold to them. So I was a slow learner probably, but I sat there watching it, and it was like, what in the world are they doing? And I ended up watching that day after day after day for about 3 weeks. And it was right in this time period. Let me see if I can get my screen draw on here. It was right in this time period right here. And as I saw them day after day after day acting this way, I finally came to the conclusion they were accumulating a huge, huge position in Palm. And I looked at it and said, you know what, if Goldman is accumulating a huge position in Palm, I need to do something with Palm. It's the only thing that I could figure out was that they were buying anywhere from 1 to 3 million shares a day. And I said, I'll take a gamble on this. I had a business with good income, had a lot of money in the bank. So I took a 1,000 share position in that. And then I sat there and watched it, and it just bobbled around. Didn't really go anywhere. Didn't really do anything. I was up money, down money. I was up enough I should have taken it, and then I was down enough that I was like, holy cow, man, I let this thing get seriously out of control, and that one's going to spank me. But I never killed the trade. Well, after 3 weeks of this happening, they just disappeared. And where I was in the position was right in here. When this came in right into the $200 range. And it was a couple weeks that it just went sideways, and Goldman just went right back to normal. But I kept looking at that volume that was coming in down here, knowing that Goldman bought most of this volume. And I in my mind, I said they bought 25 to 35 million shares, maybe 40 million shares, and they wouldn't do that unless they knew something. And so I just sat on it. And then finally they came in on this bar here. Price popped up over $100, and it was basically news. Just popped up almost instantly. News that 3Com was changing some things in the spinoff, and they were doing share buybacks. And to this day, it is still the single largest trade that I've ever had. The entire thing was sparked by a fluke accident. And that was what caused me to start trying to figure out, what they were doing, and the conclusion that I reached, and I think it's been proven, and we probably all accept it to a degree as fact now. If a large trader comes into the market and they're trying to accumulate a position, 95% of the time they're going to make it appear like there's a lot of sellers, and they're going to put a very small visible bid over there, an iceberg order, and they're going to sponge it up. Um, it really opened my eyes to the fact that most of what we saw on a level 2, most of what we saw on a dome on many instruments was an absolute lie that was designed to trick us into doing what I almost did, which was to lean on that big offer and say, hey, if they're selling that many, price ain't going through them. So I got very curious about that, because it was the fact that I saw the iceberg order, even though I didn't know what it was at the time. I started looking for information on the time and sales, and you can imagine this was pre-Google. You can't find anything now, even with Google, so you can imagine what was there 10 years ago without Google. Couldn't find anything other than old references to Jesse Livermore, um, Wyckoff, individuals who were kind of known for reading the tape. And I still believed in it enough that I spent a lot of time watching it and trying to determine what it was doing, and what type of patterns you could see on it, and what type of movement you could see on it. And that was the stuff that we covered a couple weeks ago. That was the end result of all of that. And so, there's been a number of years of that working consistently through any market method for me. But that was basically the result of, literally thousands of hours of watching and observing and trying to figure out what happened when, and why it happened, and how I could duplicate it. So that's how I got involved in it. It was a fluke accident. I have had some training that I paid for, uh, some price action training. This goes back into the probably 97, 98, um, with Pristine. And Pristine at the time was widely touted as the best educational resource out there, kind of price action traders. But I came to the conclusion with their methodology, there were so many rules that you couldn't remember them all. There wasn't just a couple basic things to get into a trade. There was a couple basic things to get into a trade, but it was filtered by 70 or 80 rules. And if you forgot one of the rules, they're like, well, you didn't apply rule 63. If you would have applied that, that wouldn't have been a loser. And so I finally got kind of disgusted in that. But I never have found anybody, in all the time I've done this, I never have found anybody that actually read the tape the same way that I saw it, methods that I pulled from it. I only know of one other educator that is capable of reading tape, and what he does with it. Um, there's two problems. One, he can't teach it very well, and two, you almost have to be like a savant of some sort to do it. It's not looking at the same things that I'm looking at. So that's kind of the uh, my history, where I came from with the reading of tape. And I would say still to this day, there just isn't much out there. Usually when you see people talk about reading tape, it's usually very obscure. There's not much of anything for education on it. It's not something that very many people know how to do. I think there are people that do it, obviously, after talking with that senior VP at the CME group, when they talked about going back to the way tape used to be prior to October 4th of 2009. He said that is primarily being spurred by large CME members who are tape readers. And so obviously there are some very successful people doing it, but they're not out there telling anybody what they're doing. Let me get rid of the screen draw. Okay, so those were the things that I had on here that individuals had asked about. Oh, I did have one other question. Let's see if I can find it here. I was asked if I ever found the charts. We were talking about some charts with auto fibs on them, and I did have a couple screenshots that I had snagged of that. And actually, let me cycle through this here. I'll let that load for you guys. Okay. The chart that's here, this is a 777 tick. Yeah, exactly, Pete. Where's the price? Hey, sounds good, Gerardo. There's going to be some information in here, Gerardo, towards the end that will interest you. I'm gonna tease you guys a little bit with something that Pete is working on, and I think all of you guys will find it's going to be very beneficial. So make sure you check this out. I'll put it in the table of contents when I send out the recording of this. But have a good afternoon, and Gerardo said tell everyone hi, greetings to everyone. So he has to take off. So have a nice day, and we'll talk with you, I'm sure, at some point in the future. Thanks, appreciate it, Gerardo. Anyhow, this was his entry chart. It was auto fibs. Um, had I believe he had 6 screens of this to try to take a trade. And this kind of goes back to, we were talking about trying to simplify, get things off the chart, clean things up a little better, where you can actually use it. Um, Karen, she talked about that, how she's drawing fibs on levels, looking for some convergence, kind of along the Carolyn Baroden school of thought. And this trader was doing this with auto fibs, drew it himself, and they would automatically draw these lines based off of numerous time frames, anywhere from daily charts, weekly charts, hourly charts, minute charts, and then it would overlay them all onto one chart. And this was kind of the chart that he would look for the trade setup. So this was the one I was talking about that I said, boy, when I looked at that, I thought, wow, I don't know how you can even trade that, because I couldn't find price in all the middle of this stuff. From there, he went to this chart, which was side by side with it, and this was the second filter. And as you can tell, where you can kind of see price in there, frequently you've got I don't know if you guys can see it on your end. Let me turn the screen draw back on here. But this would be 1 point on the S&P between these 2 green arrows. And so you look at this 1 point, and here's 1, 2, 3, 4, 5, 6 different lines drawn inside of 4 ticks on the chart. And it's like, how can you say that that's a level where it should bounce? There's lines everywhere. And that was kind of the second filter. And then once he confirmed what he saw on the 777 tick by looking at the 110 tick, then he went to this chart here, which was an 8 tick of the S&P, and that was where he actually looked for the entry. So this guy was the all-time champ. Anybody that I've ever worked with, for what he was looking at and what he was trying to take in, made my head spin. I saw his whole workspace, like 6 monitors worth of this stuff, and I thought, holy moly, and the guy, the end result of this, couldn't place a trade to save his life. He could see it and he could call it out, but he didn't trust it because there were too many lines, too many things. Yeah, Casey says it looks like his 4-year-old's artwork. So I got a kick out of it. I was like, man, it was just a nonstop argument where the guy was so frustrated with having no confidence and not having the ability to place a trade. And that's the frequent problem. You get that much information, and it usually leads to paralysis. What you saw over here didn't match what you saw in the middle. That doesn't match what you saw on the left side. And so you just sit there and watch it, and sure enough, you were right, and it went on without you. That's why I've always encouraged people, keep it simple, keep it clean. Have a basic candlestick setup that you look at. If you use an indicator, have one of them on there. Use the tape for your trigger and get in the trade and let it go. If you've done the work and you've tested this and you're at 50-55% win-loss ratio, the only thing that's going to keep you from making money is bad management at that point. Okay, so that does it for questions that I had in advance. Um, I'm going to reset the tape. I've got a question here from Brian, but anybody else that has questions, put them out there. The anything that you've observed. Several of you had indicated when you registered that you had some questions that you would like to address, and possibly even setup type questions that you would like to address. So put your questions out while I reset this, and then we'll dig into those. Okay, so got that set. Let's see for questions. I've got a question here. What happened to the ES trade that I was in? I had showed you guys a swing trade that I was in. I got on that trade. Actually, Pete's going to send me a check. He said for 20 grand because I was going to take it off. I was talking with Pete, and um, I was up 75 grand on the ES and a crude swing trade that I put on. And Pete said, "Don't listen to Ken. Don't ever take the money off the table." And then I ended up, when I got all done and stopped out on the trade, I only ended up with 55 grand. And so Pete said he'll make it up for me for telling me to ignore Ken. He's laughing about that now. So actually, Pete was telling me to take the money. Yeah, he says his recollection is rather different. Pete was telling me, take the money. You're leaving town. Don't put this out here, and take off and leave and get chopped. And I took some of it off while I was with Pete and let it have a chance to run. And I basically, the thing that I was looking at, it put me in a position where if it would have continued to go my direction, was looking somewhere maybe 135, 140K there on the trade. And the risk to that was that I was willing to take 55 instead of taking 75. And I felt, hey, I'll risk that to give it the chance to go. So the trades, I ended up completely closing out the December crude I had because I knew the contract was going to run out of time anyways, and I had the S&P. I got as much as 40 and a half points on it, and it went as far as 48. My next target was at 50 points, and it twice came within 2 points of that, and just couldn't get through and rallied back up and stopped me out eventually. So yeah, Edith, appreciate that. Sorry you weren't able to make some of the earlier sessions, and that recording. What I'm going to do, that will be sent out. It's going to be a couple days because I'm going to do some editing to put in some additional trades. So it will be a couple days before you get the recording, but that will come out. Actually, I may just send a quick recording of today's if anybody wants it, just because there were a number that didn't make it today, and then I'll send out the final version. It should be probably by Friday. Yeah, I appreciate that, Edith. I think in some ways the recordings are good because you can go back and review it whenever you want. And there were, I think, enough questions asked by the ones that were here. It was pretty representative of what people would have done. Oh, Karen just mentioned here too, the delta indicator. I think she got it partly working on version 7. It's fine on 6.5. But it's trying to disappear on her when she scrolls back to the left. I sent it over to a guy at Ninja. I still haven't heard back from him. Usually they respond pretty quick, but I don't know if they're just completely backlogged or what's happening. She is still working on that, trying to get that running on version 7. So for everybody that asked about that, the delta indicator, she'll let you know as soon as she gets that done. Brian, with your question here, you make a comment that most people don't trade crude, but could I spend a few minutes on what, if anything, I see on the tape leading up to and at the level that I'm watching that would cause me to place a buy or sell? And then you make a comment here. You say, or with crude, is the tape not as important? And are you just playing the extremes as price comes up and down to those previous extreme high and lows? With a lot of my trading on the crude, I don't watch the tape as much as I do on other things. There's a couple reasons for that. Because I do tend to play the crude at extremes. I am interested in levels. This is just like my own personal trading. I'm interested in levels, and I may end up giving that a significantly larger stop than I would if I was trading it, on the basis of a scalp. One of the things that I look at with my own personal trading on the crude, I virtually never will take that off without getting 40, 50 cents. I just, that's where I'm like trying to trail stop it, um, trying to stay 20, 30 cents behind it and hoping to get it to run a point, point and a half. So that being the case, for me personally, it's not as important to come in and use the tape and try to fine tune that. I'm interested in levels. I'm interested in where it stalled yesterday, where it stalled this morning. We come back into those levels. I do use the fibs a lot on the crude. There's a couple things that I would say in general, though, about the tape with crude. Uh, I do think that crude is probably one of the more difficult instruments to read tape on. And I have no idea why that is. When you look at the number of contracts at the end of the day, not much different than the Nasdaq. But I look at what's beneficial off of the Nasdaq, and I have to say there's tons of information for me on the NQ. But on the crude, it has never been one to me that is really simple and transparent on the tape. There's a couple reasons for that, I think. In some ways, you don't get a lot of large prints, and there's going to be some information that we're going to talk about in a few minutes that I think will benefit anybody that's trying to do that on crude. But here's one of the problems with crude. What do you suppose most people do for size when they're trading crude? How many contracts do you think guys are normally using? Yeah, exactly, Karen. One or two. Very few people will trade more than two. I would say very few people. Yeah, Andrew, I agree. I would say the vast majority of traders are trading one lots. Um, there. I look at it, and on bigger positions. Well, I shouldn't say that. On a normal basis, on a normal trade, when I'm not doing something really stupid, I would never trade more than five. Um, I had one this year that was kind of one of those trades you don't even like to go there, where I reacted, kind of a rage trade, and I haven't done that in years. Um, but I was furious at myself because I overlooked the Wednesday report and got nailed in a position and got slipped significantly on a trade, and I got so ticked at it, I just spun the mouse wheel, ended up taking a 46 lot trade and fired right back into it. But by and large, very few people would ever do more than a 2 lot. So as a result, the the bulk of your trades are going to all print as 1 lots and 2 lots. I mean, if you scan any 100 prints, you'll see the vast majority of them 1 and 2s. What that means for us is it's more difficult to track your large traders because they're executing off against ones, and all we see is ones. And it still moves fast enough that on crude, it does not stand out as obviously as it does on some instruments when you have this instant influx of prints. And so it can be kind of difficult for people to get the hang of that and to try to be able to see what the larger traders are doing. Now, again, I'm going to postpone this for a few minutes. I think that Pete has developed something here that is going to change that for many people and make that very easy to see, where right now it can be very difficult to see. But I would agree with your assessment there. You say that with crude it is harder to use the tape. I would agree with that. I would say that crude is one of the more difficult instruments to use tape on. Interestingly, if you ever trade the DAX, you're going to see just about exactly the same thing. There will be some large traders that hit that, but by and large, you've got to look for those flurries of prints and extrapolate from that somebody with a little more size was coming in there taking that trade. It tends to be just about exactly like crude. Karen, with your question, when you say you're interested in what prompts me to enter a trade when it gets to a level, you're talking about crude, I'm assuming, or are you talking any instrument? Crude, okay. Um, there's a couple things that I would look at. You've probably, well, you haven't been as much in the room. A lot of times on crude, it's one of the few instruments that I will scale into, and I've never been a big believer in scaling in at different prices. There is some exceptions, I guess, to any rule, and I guess that is one for me in crude. And the thing that I see in crude, I do like Fibonacci retracements, and I like moves up into a prior high. Frequently, I will combine that on a smaller time frame, and I say, okay, we've got to move up into a prior high, and we've got a Fibonacci retracement lining up here at the same place. And I see that the Fib retracement may be 20 cents below the high. I will scale into that and just arbitrarily put an order out there, put a lot out there at the 618. And if it hits me, it hits me. And I may allow that 40 or 50 cent stop on that first lot. My goal in it would be to catch the rest of the position right into the high. I don't know if that makes any sense. Let me just can't find my pen. Let's assume that we've had a move in crude where we've rallied up and we've moved around a little bit, and we've come up into a high. We look like we're going to break down, and we come back up. And I frequently will just put an order sitting out here, hoping to hit, but I actually am trying to get the position up into the high. Can't draw with this cross-handed there. So I may come in that situation, and I'll put one lot out here, but I may take anywhere from 2 to 4 up here into the high. Not 2 to 9. I don't do that with very many things, but because of the way it moves, I guess for me, I would tend to look at this and say, on this first lot, if I gave that 35-cent stop, that's going to give me a stop up here where it should have proved me wrong. And I'm willing to risk that if I can see the potential target to the downside. If I can see a potential target of a buck, I'm willing to risk 35 cents on it. This one here, I may only be allowing 15 cents stop on what I add up here. And the reason I do that is that the 618 seems to be effective enough for me, for the way that I look at it, that probably 60% of the trades I don't get filled on the remainder of the position. So I want to get in it just in case it rolls right there. I would happily take it at the better price. But the bulk of that, like I said, is based on support and resistance, and it's going to be based on, especially on those tick charts coming up into those prior swing highs, nailing it as it hits those swing highs, as it breaks through, and it's going to be based on Fibonacci retracements. So the tape, if I was to look at the tape at those same points, again, the thing that I have to do, I want to make sure that somebody else is coming into it, and I would want to see a couple things here. One of them would be a flurry that would indicate to me that there was a decent size there. The flurry, I want to see 10, 15 lots, 20 lots. So if I have a flurry that indicates that a 20 lot trader just hit 21 lot bids, I'm willing to step in there with him. So to me, you see that once. Anytime you get an instant first flurry, there's always a chance that that's some profit taking. If you get a second burst of that, I've always said that's probably initiation of new positions. So, you're not going to be able to sit there necessarily at this point in time with the tools we have and just say, well, I'm going to wait for 110 lot. Because if you're waiting for 110 lot, remember, because of the way that is being transacted, it means that there was a guy out there with a 10 lot bid and somebody hit him with at least a 10 lot market order. So you had a big bidder and you had a big market seller. So it's a little more difficult with that than it would be with other instruments. That's where, for trying to do it, if it starts getting frustrating, trying to use the tape on the crude, what Pete has developed here, I think, is going to make that considerably more transparent, where you will be able to tell whether there's a big guy there. No problem, Brian. Let's see, Andrew, do you use an 89 tick chart? I normally have mine set on, I've used an 89 tick at many points in time, but on the crude, I usually have that on 200. And it's not, I don't think there's anything magic about 200. It just lets me see enough history on the real estate that I have for that chart. At times I may put it to 300 if it's been a particularly active day. And again, it's just so that I can see yesterday plus where I'm at this morning without making the chart bigger physically on the desktop. But the 99% of the time it's set at 200 ticks. I will take that if I'm looking at a longer term. I will usually pop that to like a 2000 tick, look at it over the course of a week, look at some levels over the course of a week, and then I'll go right back to my 200. Ken, you ask, what is the attraction of crude over other instruments for a trader with not very deep pockets? The attraction, I think, of crude, you're either right or wrong, and usually very quickly whether you're right or wrong. And some traders like that. That can be a disadvantage, though, if you don't have deep pockets. So, it comes down to personal preference. For me, I like instruments that jump around, and if I see the S&P move 6 ticks in the course of 5 minutes, and I see another instrument that moves 40 ticks in the course of 5 minutes, I'm going to probably be trading the one that moves 40 ticks. And I think that's probably going to be the biggest attraction with crude. It moves very quickly. It moves very aggressively. You've got weekly news reports that will affect it twice each week. Natural gas doesn't do as much to it as it used to, but you always had your crude reports on Wednesday morning. You had your natty gas on Thursday morning. And ever since Amaranth kind of busted with natural gas, it hasn't had as much of an impact on crude as it used to. Other than that, I would say, it's, for most people, it's probably a dangerous instrument to trade. But if you like stuff that jumps around and moves, that's a good instrument. Ken, for you, probably the thing I would relate it back to is go back to your experiences with the Russell, and then double that. It's something that can really hurt a guy if you're not used to trading fast stuff. Yeah, ugh, exactly. There's a couple other things here that you can keep in mind, and I would say just in general, any commodity is gonna have this, and Brian actually just made a comment similar to this too. When you deal with a commodity, it is a real product with a real value. And sometimes that can be easier to get a feel for support and resistance. Like Brian phrased it here, that crude repeats patterns all the time and is somewhat of a predictable market. I think my feelings with it come from the fact that you've got a real product and we can put a value on that, and people can look at that and say, $90 crude is pretty rich, and that's probably going to bring some selling in for producers who want to hedge. They're gonna be willing to sell 90s. They produced it for 13 on average. They're more than happy to take 90s because they'd rather take 90s and lock that in than see it back down to 70s. You kind of see the same thing with beans and corn, and there's not a lot of the other commodities that are thickly enough traded to make you jump in there. Gold is kind of on its own path straight up, and I don't know what to think with gold. Gold is different because it's affected so much by the dollar. But you take those other commodities that have enough volume to trade, and you see the same types of things. We can put a pretty realistic price on beans because we know that in the U.S., across the majority of the U.S., on average, it's about $7.25 a bushel to produce. So we kind of know the floor. It's not going to get much below that. That's what it costs since fertilizer's gone up 7.25, 7.5 a bushel. And so we kind of put a floor on it and say, okay, probably not going to go much below that. To the upside, we look at it and say, farmers are pretty happy getting 10 out of it. And if it starts getting up there 13, 14, 15, you're going to start bringing sellers in, and that's going to push it back down towards the cost of production. So there can be some advantages to that, again, that go beyond just things like the S&P. It's like, how do you put a value on the S&P and say, well, I think it should be at 1,200, then all's good in the world. We can't do that. That's why I think there's been a long-standing saying that if you can't make money trading, trade corn. You can put a realistic value on it. You do get a realistic range. It's getting affected to a degree by funds, and they're looking for a hedge against the dollar, and they're viewing the dollar as a bad investment. Therefore, they want to put money into commodities, because if the dollar's going down, commodities are typically going to be going up. And I think that it's gotten to the point, my personal viewpoint, I know it's not addressing your question specifically. My personal viewpoint is I'm really starting to feel that they need to start banning some of the speculation in those commodities. I don't want to be like a doom and gloom type prophet, but it has gotten to the point that these institutions are pushing the prices of commodities so far that it's going to cause starvation and I think ultimately anarchy if they don't get a handle on it. Yeah, Pete, the commodity ETFs, they're definitely pushing values way beyond where values should be. And see, that's something that we don't feel as much. We see it in the news frequently saying, hey, we're worried about deflation, and we're going, what deflation? Everything we're buying is going up. We don't feel it like they do in other countries. Just as an example, in India, over the last couple of years, food prices have doubled. But you're talking about people that took 85% of their money just to feed their family, one meal a day. Those prices double, and they're going to be going out there with the pitchfork trying to kill their government leaders. And it's just a consequence of the greed and these large the ETFs. It's basically a mutual fund called something else, but they're coming into commodities and they're trying to take these big positions. And you have to say, this is something that ultimately is going to really hurt mankind in general. And they've had some position limits, but some of these funds have come in and gotten around the position limits, claiming to be hedgers, bona fide hedgers. And they're not bona fide hedgers, but they're getting around the rules by claiming that they are. And that allows them to come in and take positions way, way beyond what the limits are for everybody else. So kind of a dangerous thing. And that's a sidetracked off your question, but it definitely is something that there's some dangers there. I think to mankind in general from all of this. it is affecting things where it used to be very nice price ranges back and forth and back and forth, and now we're seeing, farmers have always been happy to get a couple bucks a bushel. It's a fair profit. They've always said, hey, that's good enough. When you see that is running 14, 15 bucks a bushel, cost of production is 7, and the guys making the money are not the farmers necessarily, but it's the ETFs that are buying it and driving it up. Something's wrong with that picture. When the farmer's making $2 off of it and the speculator's making $8 off of it, something's wrong. And it's tough to put a value on it. So let's see. Trying to catch other questions here. Andrew, with your comment on the 6.5, you're not seeing an indicator folder under custom. Is that you're trying to put, is that with the price alert indicator of Karen's? Okay. With that, trying to think of where that is on 6.5. Karen, do you recall you're still using that, I think? I guess I might, well, no, I don't even have 6.5 installed on this operating system. Let's do this. I'm at 27 minutes here. So let me reset the tape, and while I reset that, I'm going to peek into my other operating system for where that is, and then I'll be back in 2 minutes. So Andrew, when you go into that folder, the path that you're going in through NinjaTrader 6.5, and then you're going into bin. Is that correct? Okay. And then inside the bin, you've got the custom folder, but then when you get inside the custom folder, you don't have an indicator folder. That is a folder that is there by default in Ninja. You have a folder called Snippet. I've never even heard of that. I don't have, on this computer, I thought I had 6.5 installed, but I had changed some things around. And I'm going to just put this up over here. Oh, actually, I do still have the folders here. This would be in my documents, and this is, you want to make sure it's the right one, because you'll have a program file, excuse me, a Ninja folder in program files, and then you'll have a Ninja folder in my documents, unless you installed that somewhere else. So you don't want to be looking at the one in program files. The one in program files, that is where the sound file goes, and that goes in the sound folder. But where we have the bin, the custom, and the indicator, that's going to be in my documents. Okay, that resolves it. Yeah, that's where you've got two different things there. One of the folders holds the sound files, that's in your program files, and then everything else goes in my documents. Okay, excellent. I was going to say I didn't think I had it, but I was starting to look at what was in there in custom, and I don't have anything like Snippet or what you were referring to there. So, okay, problem solved. Let's see. Sorry, I'm just going back through these questions, trying to delete stuff if I've answered it. So give me a minute. And Karen, I'm going to go back to your question again. And you had asked what prompts me to enter a trade when it gets to a level I'm looking at. And initially, you said, yes, you were talking about crude, but then you added or anything, like any other instrument. The trigger, the actual thing that pushes me into the trade on anything I do, whether it's the S&P, beans, any instrument that I was looking at, the vast majority of the time, the trigger on that is going to be the action on the tape at that point. And I guess probably a way to try to clarify that or explain that would be to take a look at the steps that would be necessary when you come in and you start you start your trade plan. And I would just say this is the way that I tend to look at things. The thing that I'm most interested in is going to be a level of some sort. And we talked about that, numerous things that a trader could use for levels. But price has to get, to me, to what I would call a level of interest. So whether I was taking that off of a point of control, value area high, value area low, swing high, swing low, it has to get to a level that I'm interested in. And when I look at that level, the thing that I'm interested in that level is the potential for it to reverse there. I don't usually trade continuation moves. I usually trade reversals. So if I'm looking at reversals, I want to have some type of idea that price is going to reverse there. So when it reaches the level of interest, at that point, the trigger for me is always going to be the tape. And that will be the final confirmation. The level, all I need to do is hear the alarm go, and I look at it and it's there. At that point in time, the only thing that will put me in the trade or take me, or keep me from getting in the trade is going to be what happens on the tape. Again, when I try to specify what that is, remember we talked about the factors. This would be on the second day. We talked about the things on the tape, like the speed of the tape, like how fast the prints are actually coming in, uh, identifying the size that's on the tape, what's the interest. Remember, we talked about several of these factors that on any given instrument that we would be trading, these would be things that we would kind of consider critical things. We look at who's in control of the tape, who's acting the most aggressively. We talked about the results. What type of results are they getting? As an example of that, you might refer back to that trade. I think it was put in there on day 7 on the NQ. And I was already in the trade, so I wasn't going to just flip-flop on it. But the results, if you want to see results, look at that video on day 7. That is probably the most crystal clear example of them not getting results. Because you have to say on that trade, overwhelmingly, it was all buyers. I saw enough to get me into the trade. There was a pattern there. It was at a level that interested me. Remember, that was the trade where it was an up day. The market had pulled back. It had moved back up and was going up in a channel. So it was up here at a level of interest when I shorted that. All the way through that trade, absolute overwhelming buyers on the tape. The buyers absolutely owned the tape. Every print, it seemed like, was green on that. But in spite of that, they could not push it down. Now, because of where that was, I would never have considered that for a long, and the reason was it was not at a level where I was interested in going long. It was rallying in a channel back up into the high, and I was not interested in going long there. So what I saw, what I needed to see to say, hey, there's a chance to nibble at it, take a scalp, potentially turn it into something bigger. I got in the trade. Subsequent to that, if you review that trade, you'll see it's all results. They could not get any results for it, and gradually that resulted in the breakdown, which took price back down, broke it out of that channel, and made some cash off of it. But those factors that we discussed, remember, it was the speed, the size, the control, the results, the interest. Out of those things, frequently the results, I do view the results very keenly, but usually the results are more apparent after the position is in. I don't use results as often to enter. But if I see that it's all buyers and the buyers just can't get anywhere with it and it's being absorbed and the sellers just keep offering and offering and offering, the market buyers are more aggressive, but it's just being absorbed. The sellers are putting enough out there to absorb all of the buying. They can't get anywhere with it. It absolutely can be a trade. But again, I think in looking at those factors, it's probably better to pick one of them. Try to own that. And once you own that, then add a second one. Start looking for a second one as well. But don't add that second one until you own the first one. So you might be looking, I would say, for a guy that's just starting out. Let me get rid of this. For someone that's just starting out, it might be beneficial to first of all look for the size on the tape. You know, when you have an idea that this is a potential turning point, um, you ask yourself a yes or no question. Is there any size there? You're at your level. Your chart setup is there. Everything you need to see from a charting perspective is there. But now you've got to stop and ask yourself, is there any size coming into that? Does anybody else see it that way? Is there smart traders coming into that? Or rich dumb traders? You know, but usually you say, is there smart money coming into that? And that's going to be the trigger. That's what is going to make me take the trade or not take the trade. I would say that the size, and we're going to talk about this in a bit when we talk about what Pete's developed here, the size is going to be something extremely transparent on what Pete has put together. Is going to be very beneficial for you guys. So that's a good place to start. It's easy to see. And remember, with the size, there's two things. It could be a big print, but it's more likely that it's going to be a flurry of prints just because of the way the reporting changed. You have to identify that. Once you get done with your size, you feel like you've got the size mastered. I would say probably start looking at who's in control. You know, you can identify the size very easily because either it's there or it's not. You come up into that high and either you see big prints come in, you see big flurries of sellers come in, or you don't. I mean, that's just a simple yes no question. The control takes a little more work because as you're analyzing who's in control, now you kind of have to gauge things, and what you're doing with it is you're gauging the ratio of buy and sell orders, or in other words, you're kind of building that delta in your head on the fly. Who's more aggressive? When you see that control, the beneficial thing is to see that when that control rotates, you know, like from the buyers, that rotates to sellers or vice versa. The buyers have been in control, they've just bought and bought and bought and bought, and all of a sudden you see the prints, the big size comes in first, and then the sellers take control, and back it goes the other way. But I would say that for most people would probably be the most beneficial way to attack it, is learn how to identify the size accurately. Once you can identify the size, then start looking at the control. Now, the thing that you gotta remember with this, and Karen, this is something I know you've voiced before, is when you start talking about control, there will be many times when we look at control and we come away saying no one is in control. Run out of room there. What does that tell us? We can't identify whether the buyers have it or the sellers have it. If that's the case, is that where we want to be initiating trades? Rather than saying, my goodness, you know, I just can't tell. Realistically, we should probably look at that and say, is that where I want to be in a trade where I can't even tell who's more dominant right now? And I would say no, that's probably the time just to sit on your hands and say, yeah, it's there on the chart, but I sure don't see it on the tape yet. To me, the best places is the transition from buyers to sellers, sellers to buyers. You find that transition out near extremes, makes a new high by 2-3 ticks, and you see the transition rotate into just aggressive selling. That's the best type of trades for me personally with my own trading methods. Now, the other factors, like I said, when we talk about results, the results you'll frequently see after you're in the trade, and you'll see that you know, let's say that we came up into a high, we saw it rotate from buyers to sellers, we saw the big size come in, we jump in the trade. We get in that trade, it goes our way a few ticks, and then we see the buyers come back after it, and the buyers take the tape back, they take the control back, and they start pushing aggressively, which they frequently will. They're going to take another run, they're going to try to get through that high. This time though, as they come back up into that high, it's just absorbed, and they print and print and print and print at the market, and it's just absorbed, and nothing, they can't get through it. See, those are the ones where it's a good thing to hold on to and say, boy, if they can't get any results, it's very possible that the sellers they're going to get emboldened. They're going to come after it even more aggressively, and when they do, the buyers have used up all their bullets, and they're going to have to turn and run. So the results, after you're in the trade, the interest, again, this I would say the interest ties in very closely up here with size. And by interest, you may see it run for point after point after point. It's just all buyers, no sellers, and finally you come to a level where they start to seem interested. So if that's the case, and now they're interested there, are they going to defend it? Again, it's not as important as seeing size or seeing the control, but it's just given us clues that, hey, they've backed up to this level and now they're interested in it. Sometimes that interest comes at weird places. That in-queue trade that we were talking about earlier that's on day 7, if you go back and look at the sellers really got interested in that once you got down completely out of that channel and it clearly broke down. That's where the sellers actually got aggressive and really got interested in it. Prior to that, it was all buyers. But the sellers didn't get interested in it up into the highs on that particular trade. They got interested in it after it broke down. And that was where they probably felt that they had them on the ropes, and they're going to take a run at the low of day. The other factor that we had in there, was the speed of the tape. The speed, again, I'm just referring to, are we 2 seconds between prints, 3 seconds between prints, and all of a sudden we hit a level and it just goes nuts, and it's flying by, 40, 50 levels a second. Okay, do you guys have sound now? Okay. Don't know what happened. I got a network warning off of GoToWebinar saying the audio was gone. Never figured I'd use the screen draw to communicate with you guys, but I guess can use it for all sorts of things. I don't know if something happens there, just in case it recurs. If we have to kill it, we can kill it and just log back in with the same link and pick it up. Let me go back through the questions here. Yeah, I've got that little bamboo tablet. I can't write with a mouse to save my life. I actually can't write with the bamboo tablet either, but it's faster than the mouse is. Let's see, Karen, she got dumped out of here. So she said she's having some trouble with 64-bit. Anybody else using 64-bit with Ninja 7? Any problem with sound files? She's saying she's having sound file problems with Ninja. So that alert indicator won't play sound files for you, Brian, on a 64-bit. 64-bit stuff has always scared me. I've always avoided it, and it's good ideas, but unfortunately, seems like the software developers have never got it to work as good with most of the programs that are important to me. Well, Karen's comment, and I've said this before. Sometimes something just strikes you because you hear it in a different way. She made the comment that she thinks it might help her to realize that first flurry may be people taking profits, and then you want to see a second flurry come in there. So she may realize she needs to do that a touch later, allow that first flurry to go, and then if it hits it again, then take the trade. So it can be beneficial. You have to look at your different instruments, see if that works better for your instrument. I do frequently see that, waiting for that second flurry to come in to indicate, yeah, that wasn't just some take profits. It was this is now initiating. Marty, you're using that with Linux. You're using Ninja with 7 with Linux? Or I was gonna say, how are you pulling that off? Come on, Mary. No. Yeah, that's I've always hated Windows, and I guess it's better than DOS, but not by much. So, unfortunately, we're stuck with it as traders. I wish that they would get something in Linux, or the Mac has got some advantages in some ways. I've heard guys that are running that using programs. You kind of give up some of the speed advantage that you might have gotten from the Mac because you're still going back in and running it in a Windows mode, but kind of tough to deal with. You just get stuck with a platform, and that's what we have to trade on. Let's see, Karen, do you have your audio back? Tom, you said my Zenfire ran out today, so I linked up the Ninja Dome with eSignal data. I do not have the 5 levels of buy and sells. Is there a setting in Ninja Dome to put on the 5 levels? There is. When you come in here on your properties, this will be down on the lower section under your general settings. Show market depth right here. That needs to be set to true. If that's set to false, that won't show your 5 levels. And if it's not doing that, then it must be something with your connection. But I would say that's a good place to look. Just properties general, show market depth, make that true. Show cumulative depth, that usually I've always got that set to true. That's just a default for me. So Karen, several of the guys said that they're having problems with sound on the 64-bit. I know a number of traders over the years that did the 64-bit, then immediately had to go back in and reinstall it as a 32-bit. So yours is set to true, Tom, but it's still not showing you your market depth. I don't have any idea because I've never powered it off of eSignal. So other than that setting, if anybody else has done it, maybe throw something out there. But well, let me reset the tape. If there's any other questions, put them out there. And if there isn't, I'm going to... Oh, that's true, Karen. Karen made a comment that you might not get that with the package that you've received. You may have to contact eSignal and add that to your package to have them put the market depth in there. They may not be sending it to you. It's been so long, I got disgusted with eSignal 8-9 years ago and swore I would never use them again. But I forgot they charge everything is a la carte. Okay, let me reset this. Like I was saying, get your questions out, and then if there's no other questions, I want to go through just a little bit of information on something that Pete has developed here that I think you guys are going to find very, very beneficial as soon as he gets it ready to go. I'll be back in like 2 minutes. Okay, so I've got a mess on here. Let me move a couple things around so I can actually see. There's a couple things that I was going to mention with what Pete's done here, and I don't ever want to put somebody on the spot or embarrass somebody, but Pete has been in the room with me for a little while, and we've had some interesting conversations. It was actually a question that Pete had that caused me to get on the horn with the exchange and finally figure out what they changed on their tick reporting. And I had really appreciated that Pete asked about that, because I just kind of accepted it and said, well, I'm making money, don't understand exactly what's going on, what we're seeing here didn't make any sense. And we talked about that previously in our workshop. As a result of that conversation, and we were talking about what the market used to be, what the time and sales used to look like, Pete came to the conclusion that he could program something like this to basically put the tape back the way that it used to be, or the way that was easy to see. And what he's developed here, I have to say, in looking at it, has actually become easier than it used to be. Remember what we were talking about prior to October 4th of 2009 on the ES, the YM, and the NQ. Everything else had already rotated into it around 2006. But on those 3 instruments, if a guy put a 1,000 lot market order, they figured that for the bandwidth that was available and for the speed of the computers, it was better just to report that to us as a 1,000 lot execution. And it didn't matter that that might have been 1,000 individual executions. They just showed us a 1,000 lot execution, one print. Tape was considerably slower. It was easier to see the big orders because the big orders showed up. Anytime there was a big order, they just printed it out there. It didn't matter that they actually, in the back office, executed that off 43 different ways. All we saw was the market order, or the intent of the order, or who was the aggressive player. Well, as we discussed, that has gotten more and more difficult to keep track of. And as a result, we see these big flurries. And as I told you guys, the way that I adapted to it, when I see those flurries, in my mind, I'm looking at the height of the screen. I know I've got 100 lines on there. If it's all ones, I know there's 100 lots just went off. If there's a few big orders in there, I can tally in my head and get a ballpark idea. But if you guys recall, one of the things I said, it changed in the way that I was trading. Before, I might see one or two prints filtered at 50 or larger on the S&P. One or two of those may cause me to take a trade. And after October, on October 4th, when the market opened on that Sunday afternoon, from that point forward, it might take 15 or 20 prints filtered at 20 or larger to have the same impact on price. So as this was discussed and kind of batted around a little bit, Pete started working on a way to put that back together and allow us to see it the way that it was meant to be seen, if we were going to easily find those big traders. We don't really care that it was executed in 43 separate executions. We just care what they intended to do with it, who was the big order. Now, it's kind of ironic because one thing that tape orders have always requested is an uncompressed, raw, unfiltered data feed. And one of the reasons for that, we don't want somebody else messing with our data where they only put through every other print, or they compress everything together and send it to you as a package every quarter of a second. We want it coming in raw. And I personally have said that. After looking at what Pete has programmed, I have to say this is so far superior to raw data. There is no comparison in this. It is literally that groundbreaking to me when I look at the tape. So just to give you guys kind of an idea of what's going on here, is the center time and sales is the time and sales as we know it. That would be just our basic time and sales, which is unfiltered, nothing done on it coming in live. The time and sales on the left hand side is filtered, and this is using the algorithms that Pete has programmed into this. And basically it's taking out all of the stuff smaller than 50 contracts. Now remember, on our filters before, when we were filtering trades, we could take trades, they had to be at least 50, but we couldn't say, show me between 3 and 10 lots. It had to be at least 50 or it didn't print, or it had to be at least 10 and it didn't print. But what he's got going on the left-hand time and sales, that allows him to filter out both above and below a certain size. So we can take and say, just show me trades within this size bracket over here on this time and sales. So the section that's in the box here, all of these trades went off at the same second. They fired off and printed, and we see it this begin on the 17s, the one lot prints 18 quarter. We see that print here. And then on the high end of that, we see the print, come through where we've got the 18 quarter, a 10 lot print, and we see that print there. But you notice that all of this stuff in the middle is no longer shown on the left-hand side. And the reason for that, in the parameters that Pete has set up with this, it now takes those orders and says, because of the way they came in, because of the spacing in the sequence and the timestamp there, that was one order. Very likely that was a market order. So it takes this whole section of green prints and it simply prints it off over here, tallies it all up, prints it off as a 52 lot at 1850. Does that make sense to everybody? Instead of this flurry that pushed down, half the screen, we just get one line 52 lot market order. It tallies it all up for you. Now you think about what that does for you as a tape reader, where we're sitting here on some of these instruments streaming by so fast you can barely focus on it. Now we don't have to do the math. We don't have to guess whether it was 3 screens, 5 screens tall. Sometimes it jumps so far you know that it went more than a screen, but you don't know if it went 10 screens or 1 screen. And what Pete has done is put that back together to say, look, this is what the market order likely was, give or take. It's not going to be accurate on the nose, but it's going to give you, probably plus or minus just a few lots what the actual market order was. On the other side, on the left-hand column, that's just going to show us our small stuff that comes in, where it was just one print and it was in and done. So I'm sure you guys can probably see the advantage to that when you start looking at something. Now, we talked about that with crude. We see these prints come in. We're trying to tally these prints up, trying to determine when it was a big order based on the speed it came in. Well, this is going to enable us to see that without having to guess at it. It's going to just tally it up for us. Pete has customized this to quite a degree where we can change the filters on it time-wise. It is not to the finished product stage yet. And I'm playing with it and Pete's playing with it. I'm watching this, and it's kind of nice because we can come in there and say, look, compress anything that comes in this time frame. Put that back together and call it a market order that was that big. So it is going to be very flexible. We can customize that to whatever instrument we're looking at. Another feature, it's not here on this screenshot, but another feature that Pete is working on this, for those that are a little bit challenged when it comes to judging the momentum, is a speedometer, if you will, to show the speed of the tape. Now think about what this could do for you if you're trying to judge this by eye and you have a little difficulty. And let's imagine this speedometer, we don't know what the final format's going to be, but my suggestion on it, and if you guys have input, I'm sure any input that Pete gets on this would probably be beneficial. But imagine that you could take on your dome and you could customize this time period, and you could say, take the average time in between prints over the last 30 seconds or over the last 1 minute. And let's just imagine that over the last 1 minute, when we average together the time between prints, we come up with a total of 1.7 seconds between prints. And now that changes. What if we come into an area and we see that over the last minute we've averaged 1.7 between prints, and now we see the speedometer ratcheting up, and all of a sudden, we're down to 20-30 milliseconds coming between prints. See, we no longer have to sit there and go, crap, I think it's getting faster, I think it's slower. Some people have difficulty with that. That has always been relatively easy for me to track in my mind, but you can't back test it, you can't prove it, and you can't convey that to everyone. Not everyone can see that. So you think about the benefit of that, just to be able to say, look, I want to compare it. I want to compare over the last 5 minutes. What has the average prints been this whole rally? How fast are they coming in? And where are we at now relative to that? This is something that Pete has put a lot of effort in this. Pete is a programmer, but he's basically learned a new language to program this for NinjaTrader. So I have to take my hat off to you, Pete. If I had studied this for 10 years, I wouldn't possibly be able to program something. It's like, that ain't me. That's not my forte. But very, very nice work. And the thing that I see that this has done for somebody who's serious about tape reading is it takes out about 80% of the mental mess with your head, difficult stuff to deal with. And it simply allows you to use what we need to see on the tape. So in that sense, because of the flexibility and being able to reorder things and change the time filter, uh, you can see why I say this is more beneficial than what the Exchange did when they just simply put it through as one print. Going to be very, very powerful tool to have. So I think for you guys, probably one of the best things to do, Pete is putting this together, and I know Pete kind of changed midstream a little bit. As a programmer, he's like, I don't want to make money programming. I'm trying to, trying to trade. But, he's gone to the trouble of learning a new language and putting this together and seeing the value there. And we're excited about this project. Pete is putting a website together that he is going to offer this product for sale at a reasonable cost, and it is something that I think I'm on there as his first customer already, just from looking at the original first few versions. So what Pete's trying to do is have a release of that in January. See, I've already got all the comments coming in that Karen, she has dibs on second place, and Ken says give you his compliments, Pete, for that as well. I think Ken, you were in there when we were kind of initially talking about this stuff, so definitely some nice comments here going your way, Pete. Karen made one suggestion. Is it possible to put like an audible alert if the speed changes? Personally, that would be something that, again, the person would have to turn off or on or do that. I hate noises banging off in my ears all the time, but some people might find that beneficial. I don't know in the real world, Karen. Pete says there's no reason why it can't be programmed in there. In the real world, I think the speed will change often enough that it might drive you crazy. See, Ken, that's what we're talking about, is putting this on there in a graphical form, like a speedometer of some sort. However it's laid out. I was thinking about it, and I mentioned to Pete like a little speedometer to see the change, but how it's laid out, I don't know. I would think that based on what I look at, it would probably be most beneficial to have an average of X number of seconds, because we want to compare that. But if we're there on a slow morning and we've been in just a grinding move, that to me, I would like to say, hey, I want to compare this to the way it's been for the last 5 to 10 minutes. That's how long we've been rallying up, and I want to see that when that starts to accelerate. The audible thing that might be difficult is that if you do this, you would almost have to do this on your filtered side. And the reason I say that, if you did it unfiltered and you had the string of prints come through, it's going to immediately fire off and say, hey, you just had 40 prints in 10 milliseconds. So I don't know, as far as audible, whether that would just be constantly dinging and not really doing you good. To me, I look at it and say, the way that I use tape in the real world, if I've rallied up here for 4 minutes and I'm watching the pace of the tape over that 4 minutes, and I come up into the level where I'm interested, I want to see what the pace is right now. Does it slow down? Does it speed up? But that's what Ken's going to be working on, or Pete's going to be working on, putting that in there in kind of a graphical form of some sort, so that you can see what it was and where it is. Going to be very beneficial. I don't know if we got we got Kevin in here. We got a suggestion that we put a tachometer on it, but if Kevin got a hold of that on his Sim Maserati, that's going to be trouble. He's got the speedometer, he's got the tachometer. I'm still going to come cruising with you in that one of these days. So, especially if you start picking up Sim Chicks in it. So, anyways, let's see. I think as far as this goes, Pete, is there anything else you want me to mention about this? Karen said she wants to go for a ride in it too, Kevin, so Gotta gotta head out to the Rockies. I don't know if I put the picture up here. Let me see if I got the screenshot still. Thought I had the screenshot. I have to download it real quick. Give me just a second to grab this screenshot. Pete, is this better or the other one? I was trying to look at the two. I'm not going to go as in depth on this because this one is a little more complicated. I think, Pete, this is actually, you did the dome first, right? If I remember correctly. Okay. What Pete started doing with this when he first tore into this project is he started creating his own dome. And initially he was feeding that off of TradeStation data and then switched it over where he could feed it off of Ninja. And you guys are all aware that on most instruments we have 10 levels that are visible on our dome, on the market depth on each side. But Ninja only puts half of those levels through. We only get to see 5 of those levels. So you'll notice here, and let me just get my screen drawn so I can get a big fat box around this here. You'll notice that what he's worked into this right now is 10 levels that are visible as opposed to the 5 levels that are visible. And he's running this through Excel right now. This one is still a work in progress here. But one of the obvious benefits is that we can see the full market depth that's available on the exchange. You can see some size clear out away from the market at times, some big size sitting out there waiting. You watch and see if it pulls what it does. But the other features that he has put into this is it lets you see the market depth and the actual trades all in one window. Now, if you compare that to the dome as we have it, see where my dome is. Oh, I got to get the screen draw off. You look at the dome as it sits today, is you get an execution that shows, but it's very rarely ever accurate. It doesn't update fast enough to truly be accurate. And so it sits here showing a 1 lot executed at 24. In the meantime, we don't know. There could have been several hundred have gone off there. We flip down to get a 5 lot. Well, when you watch Pete's dome run, you're going to see those trades come in live in real time. Exactly, Karen. To be able to see the spoofing and the games that are going on here. And with these columns, these columns, I think, Pete, you mentioned these can be moved around. If you wanted to put the book side by side in the middle, you can. It's pretty flexible with where you put them, but the way it's set up right now, they're separated. Your market depth is over here, column H and column E. But the other columns, there's several things. Let's see, in this screenshot, that's not showing. Let me get the other picture because that's showing the other columns. It's actually able to put more information in here than you've ever seen on a dome, but it's in a pretty user-friendly format. You come in here on this far right column, and the information that's on here is basically printing a delta right off the side of your dome. This would be the one on the far right side. It is something that's user definable, but you sit there and you're able to take those trades. Like he said on this screenshot, this is about 1.5 hours of trading overnight, as it's just gone back and forth last night. But you can kind of see what your delta was down this right-hand column. The column just to the left of that, this is the total that traded at each level. So in a sense, you're building a little miniature volume profile here, so you can see where the volume really traded here through these 3-4 levels, and not much traded up into the highs and down at the lows. We've got let's see the other columns that are on here. It allows you to see, I think in this case, correct me if I'm wrong, Pete, but the 1156 that's highlighted here where my cursor is, and let me just draw an arrow in here. This 1156 would be the number of contracts that was sitting there when the when the price moved into that level. There were 1,156 contracts there. So we start thinking about that in terms of tracking iceberg orders, stuff of that nature. There's a couple things we need to see is what was sitting there and then what printed there, what actually traded at that level. So if we're able to see those two things, we should have an idea whether or not we've got icebergs operating. So Pete, the column, let's see, which one is it that shows? Is it the 201? I can't remember what number it is there. Yeah, the 201 traded. Over here, we had 1156 when we moved into that level, 201 traded there, but it's already down to 512. What does that tell you? If you tally these two columns, you basically had 700 lots that either traded or are left, but there was 1156 when we moved in there. So we can look at that and say, okay, 400 lots pulled coming into that level. You see how having this information, and you can turn these columns off and on, you can move them around, put them wherever you want to put them, and take the information that's relevant to you or to what you're specifically looking for, and turn the other columns off if you don't want to see the total volume at that price. If you don't want to see what the delta was on that, you just turn those columns off. But anyhow, you know, you think of the value of that when you start seeing iceberg orders. You may come over here on this side, and you may see that that's printed off 1,800. You still have 500 left, but let's say that there was only 300 here when we arrived. It tells us that there's somebody big in there that keeps offering out. They've got an iceberg there, and they're selling a lot more than is visible on the dome. You know, these are things that you have to do in your head. I've always done it in my head. Some people can, some people can't. But here it's making that information available. It's right there in front of you. Now the other levels that are on there, let's see that column. Pete, which column is that? That's over here, the 566, 675. Those are where extra size has come in. This is size that has been added to the level. You know, changes in the bid size. So you can see that they're adding to this bid here. They're taking away from the bid down here, staying fairly even down here, but you've got close to 700 lots adding into the bid, 566 adding into the bid. So that's going to track your change in the bid size. So anyways, you know, this one here, again, I have not played with this as much as the tape, but I'm sure you guys can see the value to that. You've got your little PP over here. You can put in these price points of interest or levels of interest and just mark those in the column. And that way you don't necessarily have to be glued to the chart. You just know that this is a level that you're interested in. And now you're over here looking, you see that they're starting to thicken up. They're starting to add size in there. You know, does that start giving you your first clues that they may try to hold that level? You know, they're coming in right ahead of it and they're adding size to the bid. You know, it gives you some information that is difficult, if not impossible, to get from a standard dome. When he's done with this, we're all going to sick him on a order entry stuff that just does it all for us, and then we'll all go down and buy him free beer in Mazatlan or something. So let's see. I don't know if Pete, in covering this, I don't know if I covered, you know, the things that it's doing here. We see the market depth. You've got the actual trades going through. It does clear out if you move away from the level and come back into it. It will clear out and start it over. So you're not stuck with this 1156 for the rest of the day. Once that has moved out and away and it comes back, it's going to reset. So very, very nice, because you don't want to get stuck with it. That's kind of the downside, like the volume profiles and some of the other platforms. You move out away and you come back in and the same info is there, so it really doesn't do you any good except for the first time through. And beyond that, if you can't remember what was there, you know, from 15 minutes earlier, you have no idea. So that just resets to zero when price moves back. The same thing is going to happen with the trades that go off, you know, in these middle columns. the number of lots that traded off. Once that moves away and comes back, it's going to reset it. Let's see. Pete, let me actually find the attendance here. Would you mind? I'm going to turn your drawing on, and you should be able to point to that. Let me get my turn my drawing off, and then you should be able to draw in there. Pete made the comment here, and I'll let him mark the place first because there's so many numbers. I'm not sure where you're talking at 1220. 1,024 contracts traded. So you're talking about down here. Okay, yeah, I see your line over here. So you had 1,024 contracts traded, but only 5 the last time it came in. So that has reset and it's not stuck on 1,024, but it's resetting it when you come back into it again. Let's see. I'm trying to see if I covered. I know this has got so much on here, trying to read through the notes I have here on this. And so the black on gray prices that are on here, those are prices where it hasn't traded yet, like up in here. You can see how we can see that it has traded in here. In a sense, it's kind of combining. I think it's got aspects of market profile. It's got aspects of your volume profile, but it's doing it in a format that probably for most of us is going to be easier to understand. You can look at that and see right away this is the day's high because it hasn't traded up here into anything above 2450. You got your market delta added into it. Brian, your question, you said reds are sells at bid and blues buys at ask here in this column. Brian, the centers. Yeah. Yep, that's correct. And I'm assuming Pete's going to customize this so I can make mine green. Because every time I see blue, I get dizzy and I have to sit down. And no, I'm kidding. Anyways, just wanted to give you guys a little sneak peek at this. Oh, Pete says one of the testers is colorblind. That would make sense. It's I've always figured it's got to be there for the colorblind people. That's why the industry was all red and green, and then all of a sudden it switched to red and blue. So I do think that this is something that's going to benefit everybody here. What I think we're going to do, I am really excited about this because it takes it from some aspects of reading tape. I would say that maybe only one person out of 1,000 will ever get, and that would be looking purely for number patterns and trading off of that without a chart. I look at other aspects of reading tape and I think, okay, the majority of people, 85-90% of people should be able to get that. But I think what Pete is doing here is it's going to make it where I would say where anybody who has this is going to they will be able to identify the big purchases. They don't have to wonder about bots or the way the order was split up. It's going to make it very visible, very identifiable. That is one of the most important factors on tape. The dome for individuals who want to get into that, have all of this extra information just right there. In a sense, you glance at a chart once in a while just to see if there's a visual pattern, but you've got all the stuff you need here on this just running on Excel. Now, Pete, is that when this is done, is that going to run on Excel, or is this going to go right into Ninja as a add-on? The time and sales, obviously, that's going to print out inside of Ninja. You don't need anything for that. Okay, so what Pete said he's doing with it is there will be an Excel version for people that want to tinker with it, but it's going to be a Ninja add-on with one-click installation. So that's the advantage of knowing people who are really brilliant, I guess, is we get somebody like Pete, and because he got a crazy idea and he knows how to do it. He learned a new programming language I think in 2 days and tore into this, where initially he was working with it on TradeStation, very quickly learned a new language, ripped into this thing and putting it all together for us. So what we're going to do going forward, Marty, that it won't matter. you're asking if it will work with OpenOffice. If he makes that a Ninja add-on, it will just run right inside your Ninja platform. Really, you're going to need Ninja uh, just to enter the order. And if we dared Pete, he'd probably have the order entry on there too by midnight. So, but as far as the Excel version of that, the final product is going to be an add-on that just installs right into Ninja. You won't have to have Excel to make it work. If you guys have any questions or suggestions, let me know. But I think what I would like to do going forward with this is I'm going to invite all of you guys back for like a free half hour or hour presentation when this is ready to go. And at that point, we'll get you Pete's uh, website, and we'll let you see it live. See if you think it's something that's going to work out for you. In the meantime, if you guys have suggestions or thoughts on that, feel free to send that to me. I'll be happy to pass that on to Pete, and I'll make a commitment. If Pete won't do it, I'll do it. If you do have suggestions, we'll knock $1 off per suggestion, but it has to be valid, viable suggestions. Up to a maximum of what, Pete? $10? No. Yeah, this is something like Pete says. As he was developing this, he was looking and Pete has really added this stuff on the dome based on what he wanted to see. Um, there were some suggestions I made on the time and sales. The not a lot of input from anybody on this project here, and so like Pete's saying, is that the more ideas that are out there, the better it is in the end to be able to develop this stuff together. It's definitely going to be a very valuable tool for the trading. Yeah, Ken, I'll tell you what, I thought of you especially when I was talking with Pete about this, because I know that you've had some trouble on the time and sales trying to track it and keep the stuff running in your head and seeing the numbers. And I thought this is worth its weight in gold to you. So for you, the price is higher. Everybody else gets it cheap, but no, I'm kidding. It's going to be very valuable. So as Pete gets ready to roll this out, we will invite everybody back, and we'll just allow Pete to put on a little presentation, and I'll be happy to host that on my account here, and then we'll give you guys all the details on it. And Pete said he should have a demo available, like there'll be a short-term demo so you guys can try see if it's something that you want to do. I don't have anything else here, I don't think, as far as questions. So if anybody has questions, go ahead and get them out there. But I just wanted to thank Pete once again. It may seem simple to you, but to us it's magic. Very, very nice stuff here. So really appreciate that. And I've got a lot of guys throwing comments in here as well, thanking you for doing this. You've got all the volunteers you need in here, Pete, if you need testers, they say. So yeah, no problem, guys. It's I wanted to, when I was talking with Pete about it, and he's getting closer and closer with this, I thought we need to take that up here and just mention it, because it's something, if anybody's had that struggle, not sure what they're seeing, this is gonna definitely make it simpler. No problem, Andrew. I'll talk with you a little later. Have a great day. And Pete said that he may take us up on that. So when he gets to the point where he needs some guys to test it, he'll get in touch, and I can just send it back out to you guys, or I can give him your names. However he wants to do it. Well, I guess if there's no other questions, we'll call her quits for right now, and then at some point coming into January, we'll get back in touch and have a meeting here, just a half hour, 45 minutes, whatever we need, and we'll go through this and point you guys at it and let you get a demo and see how it's going to work for you. Appreciate the questions and all the responses and replies that I've gotten from you guys. I'm going to try to get this together. I wanted to have it together by the end of the week, but I'm putting in the rest of the trades, editing everything together. So this final recording will have our session from today, and then it will have the recorded trades on there as well, demonstrating these other concepts. So look for that. I would say by Friday at the latest, we'll have that final version of this back out there. And then once I get that behind me, then I'll probably get back into the room in the mornings, and I'll be in touch with you guys that are in there. Let you guys know that we're back in there for the mornings. But anyways, I appreciate all the comments, and Pete, everybody is very positive and excited here. So thanks again for doing that, and we'll talk with you guys later. Hope everyone has a great day.